In this video, we are going to talk about the different styles of trading, which is the long-term trading and short-term trading. Hello everyone, my name is Nikhil and welcome to the third lecture of the stock market investing course. This course has one simple objective, which is to help you understand how to trade in the stock market. So we are going to cover topics on how to do intraday trading, how to do long-term trading, or how to do swing trading. We will understand how to actually pick stocks or how to invest in the stock market, how to look at different patterns, how to read different charts. So if you're someone who's interested to understand how to invest in the stock market, make sure you do subscribe, make sure you like this video as well. The entire course will be added in form of a playlist in the I button at the top. So in the first two classes, we have actually understood what is the stock market, and we have also understood the different stock market exchanges which you have in India. Now, if you still haven't opened a Demat account yet, links to that is in the description below. Now, once you have decided that you want to trade in the stock market, you need to be very clear what your goal is. Is your goal long-term trading or is your goal short-term trading? The reason because each of these trading styles have a different way of trading. So you need to be very clear what are you going to do before actually buying the stock itself. So let's understand a little bit more about long-term trading and short-term trading in detail. So this is a concept where you're buying and holding on to a stock for a longer period of time. Can be 1 year, 2 years, 10 years. Giving you a very simple example, if you are planning to invest into your friend's business, you will not invest into his business for 1 day or 2 days, but rather you might invest for 1 year or maybe for 3 years, maybe for 5 years. Similarly, in case of a long-term investing or long-term trading, you're buying a share of a company for a longer period. So basically you're investing your money into that company or you're investing your money into that business. So in case of long-term trading, you will buy the stock from another person and it gets stored into your Demat account. So this concept of storing is called delivery of the stock. Now people do long-term investing or long-term trading for two simple reasons. One is capital appreciation and second is dividends. Now when I'm talking about capital appreciation, what this means is as the economy grows or as the company grows, the stock price of that company will also grow. Giving you a simple example, Reliance back in 2010 was roughly about 500 rupees. And today in 2021, Reliance price is roughly about 2,100 rupees. So as the company grew, as the economy grew, the Reliance share price also grew along with it. So this is your capital appreciation. Now, second reason is to actually get dividends. Now, dividend is a small portion of the profit of the company. Now, what many companies do is they'll give a small portion to its shareholders so that more people can actually invest their money into their business. Now, dividend is a great source of passive income. And many companies like TCS, Infosys, SBI, all these companies, what they do is they'll give you quarterly and yearly dividends as well. Now, when you are doing a long-term investing or long-term trading, you have to do both fundamental analysis and technical analysis. Now, giving you a very simple example. Now, when you have decided that you want to invest into your friend's business, will you give him money directly when he asks? No, you will not. You would first want to understand whether your friend is a reliable person. How much loan has he already taken? Is that business scalable? Is there any profit in that particular business? Do you think that business has any potential in the future? How many people are actually there in that particular business right now? So you would want to understand multiple different things because at the end, you're trying to make money. So when you are investing your money into your friend's business, you would want to understand so many different aspects of it. Similarly, when you are investing your money into any company, you would first want to understand their balance sheet, their profit and loss statement. So there are multiple different documents which you have to check in order to understand whether the company is actually making profit or not, whether the company has the potential to grow in the future or not. And second, which you have to do is technical analysis, where you go through certain patterns and charts to understand right now is a good time to buy or not. So in case of long-term investing, you are doing both fundamental analysis and technical analysis. Now, in terms of short-term trading, you are buying a stock or you're trading for a shorter duration. Now, in case of short-term trading, you have two different styles of trading, day trading and swing trading. Now, day trading basically means that you're buying and you're selling the stock within the same day itself. Giving you an example, let's say tomorrow 9:30 or 9:15 a.m. the market opens, you buy a stock of Reliance. Within the same day, at before 3:30 p.m. when the market closes, you should have sold your stock of Reliance. That is what we call day trading. The goal over here is very simple, to maximize the small fluctuation in the price by adding more capital. So giving you the same Reliance example, let's say that you have invested 2 lakh rupees into Reliance and each share of Reliance is at 2,000 rupees. That means you bought 100 shares of Reliance. Now within the next 1 hour, the price of the stock goes from 2000 to 2010. That means you made a profit of 10 rupees per share and your total of 100 shares. So you made a profit of 1000 rupees over here within just 1 or 2 hours. So people are trying to make multiple small trades within maybe the same day to actually get the maximum output. That is what your day trading is. Now in case of swing trading, instead of selling the stock within the same day, you might be selling the stock 1 day later, or maybe a week later, or maybe a month later. Swing traders generally tend to sell their stock at least within 3 weeks. Now when you are doing intraday trading or swing trading, it is very important for you to actually understand different charts, different patterns. You need to be very clear with technical analysis. So like in long-term trading, we did fundamental analysis and technical analysis. In case of intraday trading, you need to do more of technical analysis, because it does not matter to you how fundamentally strong the company is, because the entire position that you're taking will be just for a couple of hours. Now the question over here is, which trading style should you follow? Should you do intraday trading? Should you do swing trading? Or should you do long-term trading? Now the answer is very simple. It all depends on how much time can you allocate. If you're someone who's currently working or you're going to college, then in that case, don't do intraday trading. Do swing trading or do long-term trading, purely because you will not be able to allocate time to actually look at charts and patterns in a daily manner. But if you're someone who has a lot of free time during the daytime, then in that case, go for intraday trading. Now, one thing to be very careful about is that in case of intraday trading, the risk is much higher. In case of long-term trading, the risk is much lesser, because over here the economy will continue to grow. So the companies which are there in this economy will also grow. If you have seen the index, which is Nifty or Sensex over the last 10 years, you can see what kind of potential return they have given. But if you are someone who's planning of doing intraday trading, there's no guarantee that you will be able to make the money. So always be careful on that. Now, something which is very important to understand is what happens once you buy the stock. Now, people are under the assumption that as soon as they buy the stock, it comes into their demat account, but it's not like that. There's a process behind it. The day you buy your stock, that is your transaction day. The stock will only come into your demat account 2 days after your transaction day. That means the total period is your T day plus 2 days. That means the transaction day plus 2 days. So giving you an example, let's say tomorrow is Monday. You buy a stock tomorrow. Now, the stock will only come into your demat account on Wednesday, which is your transaction day plus 2 days. A lot of new traders, they tend to get panicked because they see that their stock did not come into the demat account even after purchasing it. So always remember this. In case of long-term trading, the stock gets stored in your demat account. But in case of intraday trading, the stock does not come into your demat account because you're selling the stock in the same day itself. So over here, the delivery of the stock actually does not even happen. So I hope you have found this particular video useful, and I hope you have actually understood what are the different ways of trading in the stock market. Now, in the next lecture, we'll go a little bit more detail about intraday trading, and we'll also understand the technical aspects of it. So the next lecture video link is over here. And if you found this particular video useful, do like it, do subscribe, and I'll see you all in the next video.